Hey traders, checking in on the stock market today. Some further bounce followed through, the bulls setting some of the short-term traps in the same way that we've seen recently. I'll point those out. And a very key weekly resistance test is approaching in the S&P 500 as well as the NASDAQ. That is the next hurdle that the bulls must get over if we're going to start to see some FOMO re-entering the space. All right, so a lot to look in on. And if you didn't check out the video from yesterday, I suggest going back and looking at it, because there's a couple of points that I'm going to reference, and I went very in-depth into a lot of stuff yesterday as flow state was flowing. So at this point in time, in yesterday's video, I made the comment of pointing out the setup that I was looking for on the FOMC reaction, because it would be what would trick the bears, so to speak, and how the bears would be overconfident with the run up into the FOMC, and it would have been too easy for that to mark a daily lower high, and just bears being overconfident on the FOMC reaction. I now have to look at myself in the mirror after this bounce is playing out and say to myself, okay, now you don't get overconfident, because every green day that we see from here is going to pump up my ego and say, you were right, you nailed the bottom, this is it. And I have to keep that in balance, and I have to keep self-reflecting and looking at the opposing side. As I talked about yesterday, putting the bear glasses on, I have to do that on a daily basis to ensure that I don't get overly biased and give back gains from the last few days. So we have very key resistances being tested right now. And the momentum, again, you've probably heard me before say, markets love to go from maximum FOMO to maximum fear, and maximum fear to maximum FOMO as fast as possible. Those flips happen drastically. Just look at oil. Recently, it was a great example. And so I'm watching for FOMO to return to the market. And at this point in time, we're not there, in my opinion. We're at a point right now where we're still in a disbelief stage, and I don't know if we'll reach the point of FOMO, but there are a number of things that I'll be looking for, because again, I'm picturing all market participants. What are bears thinking? What are bulls thinking? What are those with cash on the sidelines thinking? And right now, this very key resistance is in play. And if we break this level, anybody that has shorted the S&P 500 in the last month will then be underwater. If we reject from this level, bears can hang their hat on it and say, oh, good. All right, reject from resistance. Let's talk about those fear lows again. What a difference 3 days has made. 3 days ago, we were testing fear lows, and here we are on the verge of a weekly trend change back to the bulls. This is a weekly higher low and potentially breaking the lower high. So this is a very important level. And one thing that the market bulls have been doing the last 2 days is rejecting from resistance in a very clear place that gives the bears the top fishing play, but then puts them underwater. So we did that with the NASDAQ on the futures test of the FOMC. We tested this resistance, bear reaction into the FOMC. Bears get confident, top fish, nice, clear, easy play, stop them out. Today we did it again. Today we had, on the 4-hour time frame, we had an overnight high, we had a 4-hour higher low established, and we attempted the bull flag continuation move. And we rejected pretty hard from it. Look at this rejection. This was the morning, and on the morning, the bulls ran straight up into that resistance. Remember, if you're shorting a resistance level, you want to see the bulls get as tired as possible. Shoot straight up to that level. If you're building supports on the way up, it's different than just a straight shot up. And my visualization in my brain is a bull running on a field, and there's a hurdle of resistance of brambles and bushes and sticks that it has to get through. And if it's sprinting the entire way, it is tired when it gets to that obstacle, and it can't get over it. If it's taking its time and building support on the way up and pacing itself, it has more energy, more capital inflow to break that level. Bulls used up all of their energy and all of their buying pressure just to get to resistance first thing this morning, and we rejected. But the bulls defended support, and then it's the same thing. So swing trading bears see that rejection on the morning and say, great, easy entry, rejection from resistance, let's start daily consolidation. And then the bulls put those bears underwater again. So at this point in time, the S&P 500, and when I looked at this, it was a bit stunning, but we are $30 above our fear low and $40 from all-time highs. And now it's less than that. After hours, we're dropping a bit here. Again, bears are defending resistance. They're doing a good job on initial resistance tests. They've rejected the 3 last major resistances that we've looked at, giving top fishing opportunity, giving protecting opportunity, entering short, selling partial, putting a stop above the high, and then stopping out if you're looking bearish, but risk-free. That's the way that I've been trying to play the last couple of days to protect my long swing positions. But essentially, this resistance level is extremely important in the short term. And if we reject from it, it'll be another scenario where we reject, okay, nice and clear. Everybody saw that level. We're rejecting, bears are top fishing, and it's working. And then if we set a higher low and break that resistance level, that will be another step towards FOMO returning to the market. So tomorrow's an important day with this resistance level. And if we reject, what is our retracement size is going to be an important question that we ask ourselves. And if we look on the S&P 500 futures chart and on the 12-hour, we'll stick with the daily. Retracement size, Alt F. So if we were to reject from here, what is the pullback looking like? How much do we drop down from here? Is it a bull flag into a break? Or is it a 50% plus retracement that then opens up the door for a tightening range to continue for a good bit further? So S&P 500 overnight tonight, I'm going to be watching hourly consolidation to see if it remains healthy. We're going to be watching 4-hour higher lows. The bears must break 4-hour higher lows to confidently reject from daily resistance. The NASDAQ is different. The NASDAQ resistance level is not in play yet. So bears are more comfortable on the NASDAQ, and this is because our other major sectors like healthcare and the financial sector are lifting SPY up faster. And QQQ is lagging behind here because its resistance is still a ways away. And we dropped to a lower low first. So the bulls have more proving to do on the NASDAQ. We haven't changed the daily trend bullish. So it's a different setup for the S&P 500 and the NASDAQ. And as far as the resistance, the amount of distance to get to the resistance, 2.25% still. That's a long ways away. So we can absolutely reject from that resistance level. And that's the bear's hope, obviously, in the short term, is just another weekly lower high, another resistance rejection. Tomorrow's quadruple witching. SPY is going to artificially drop. I do it every time. I'm going to wake up tomorrow. I'm going to look at SPY and go, oh man, we're down big. And it's going to be, the drop is going to magnify what it looks like because of the dividend distribution, which is why we're going to use our futures charts, but it's quad witching. And it's something like the highest concentration of blah, blah, blah options expiring ever. So we're going to see volatility tomorrow. Another note is tomorrow, volume on the morning doesn't help us because the bell's going to ring and there's going to be a massive amount of volume in the first 5-minute candle. And that's part to do with quad witching and how things shape up. But we can't use comparative volume analysis, which I often do. You know, I'll look on the morning and say, okay, we're 30 minutes into the first hour of trading and we're 75% of yesterday's volume in the first half hour of trading. But we can't do that comparison because the volume is going to be skewed at tomorrow's open. So just keep that in mind, a couple little things that we have to remember on quad witching. So if the NASDAQ rejects from resistance, we look for the daily high or low. So again, with my mindset, I am bullish swing positions, but I'm looking bearish on a daily basis, day trading. And it's not because I'm bearish, it's because I'm protecting positions and I want to get into a spot where I am risk-free. So just an example of that is today, NIO is opening up, and I know I'm scouting NIO for a top fish rejection from 1877 first thing this morning. And we opened up too far away from that level. And I didn't like where we opened up for that bearish entry opportunity. It was too far away. If I'm playing off of 1870 and we open up at 18, that's too much risk for me. So I have to either use a real small position or patiently wait. And so I didn't wait very long, but this is how I approach the day. Again, I've got the long side covered. So even though I'm not bearish necessarily heading into the open, I know that I'm only scouting bearish trades because if we keep going up, I've got it covered and I will benefit from that. So I head into the morning. I made 3 attempts to short NIO. Every single one stopped out break. Well, it was a small win, but this is how it went down. This was my first entry on the morning and I got filled at 1801. And that was right before the volume showed up. Again, there was the stall out. No, there actually wasn't. Yeah, it was. So 3 minutes, 2 minutes here. We have this thing with NIO, and I don't know workings behind the scenes of what's going on as to why there is this delay before the volume comes in. But in today's instance, it really benefited me. I placed a market order to short it and it didn't fill. So I knew, okay, it's happening again where we have to wait a few minutes for orders to start triggering. So I waited a couple minutes and then I put my short in again and I got filled at 1801 and 15 seconds later, this happened. This was a 15-second candle. I just got a great fill where they made me skip the line, where I imagine what happened is there's a bunch of sell orders, a bunch of profit taking and short orders just being stuck in queue. And somehow mine got put to the front of the line to have me short it and fill at 1801 and change. And then 15 seconds later, I'm up 2%. So that had me very comfortable very quickly, but we V-shaped bounced. So what I did was, I get that fill, I see that 2% drop in 15 seconds, you better believe I'm selling half. So I sell half, my break even is now in the 1820s, the mid 1820s, and I stop out on the new high of the day, 1813. So I just gained 10 cents. I don't care about the 10 cents, it's meaningless to me. That's too small to matter. I was trying to have a bearish position to protect. If we open and the market drops, my Tesla swing, my Facebook swing, my MSOS swing, my SPY long-term no-touch swing, they're all going to drop. And so I want to see gains from a new position to help offset that drop in my account. So I stop out. So what does that mean? Well, if we hit a new high of the day, that means that my swing positions are probably holding on just fine. Great. All right. So failed swing attempt or failed short attempt, no biggie. On to the next one. I tried it again. I get into a spot where I short. I stop out 1 penny higher. All right. So now I'm up 9 cents on my short positions on the day. Then over here on the right, I did it again. Stopped out 1 penny loss. I'm just trying to get myself in risk-free. I don't care if I keep stopping out break even. I'm going to keep trying for that position. So now I'm at an 8-cent gain on my short on the morning. Here's my fourth attempt. Finally got a good one. 1841, I'm short. At that point in time, on the 5-minute time frame, we are at a new high of the day. And it just lacked follow through. And again, we're still under high of yesterday, so that's always looming overhead. And so I get my short, and this one it sticks because I had a good entry and the bears followed through. And so I exit half again with 13-cent gain. My break even is 1854. And so I set my stop over the high of the day at that point, and we get significant bear follow through. 5% down. So rode that half position, but started scaling out. Exited a little bit, 1750s, and then exited some on the way up because I then shifted my perspective and said, okay, well, what's the most likely scenario on NIO and BABA and all these Chinese names from here? And I look at yesterday's action and I say, we're still in an hourly uptrend. I'm looking for hourly higher lows in BABA and NIO and all these Chinese names. So I exited my short and could have flipped long, but again, I have long covered. So if I enter these Chinese names long, I'm now just going way too aggressive in one direction, in my opinion. But I did lock in that profit on the short, putting my bull glasses on and saying, we're scouting an hourly higher low, and with 5 and 15-minute oversold conditions, it's probably going to start shaping up soon. So that's how I approach the day, and it's tricky for me, referring now to the chart guys and the chat room. When I'm posting my trades, it's tricky to give all that background. Like, I'm shorting NIO constantly all morning. Doesn't mean I'm bearish the market. It just means because of my open positions, this is the direction that I'm looking in. SMH. So high of the day, 2 days in a row, almost 3 days in a row. Bull break in the short term. 270.86 is key here. That's our weekly lower high. If we don't break that level, the weekly chart is not proving much for the bulls. So again, bears are making note. They're saying, okay, I see you bulls, you're doing something. And we talked about in yesterday's video, the couple of things that were different this time around with the RSI indicator and with just how the gap up open held. And so bears are making note. They're saying, all right, I see this shift, but we're in a disbelief stage right now, in my opinion, where bears are still trying to short this bounce and maybe it'll work out. We'll have to take it one day at a time as always. And to shift from disbelief into FOMO, in my opinion, we will need these daily trend changes. So wherever we top out, a higher low and higher high is certainly going to be needed. And that's when we look to the group of people that have cash on the sidelines. And if we see that happen, they're going to start saying, wait, was that the bottom? SPY's closer to the all-time high than the recent low, and I'm still all cash. I need to put this cash to work. Did I miss the bottom? So that's what I'm looking for in terms of the psychology of market participants. I'm looking at it from all different sides. And right now, I'm in the category of overly confident bull. Bulls haven't proven enough for me to be as confident as I have been. There's been some nice signs, some nice gains, but there's still a lot of proving to be done. And I recognize that with the key resistance level that we are testing right now on the weekly timeframes. Because if we reject, again, it's a win for the bears and it's a security blanket for the bears. Okay, that was a big bounce, but we rejected from resistance. We're still in control. So keeping an eye on that level close. And we are dropping here after hours. Hourly consolidation potentially shaping up. Healthcare is leading the way. The healthcare sector is $6, which is less than 5% from the all-time high. And we are $12 above the low. So again, you look at this bull move here. This is as bullish a 2-month chart as you can get. The burden is on the bears to prove to us this is not a bull flag. One other note, what will shift my perspective, big picture, notably, is if the S&P 500 were to bounce, but fails the all-time high and confirms a monthly downtrend. Then I say, oh, okay, I can't remember the last time we had a monthly downtrend. I guess it was back here in 2015. That will be an attention grabber where I'll start to believe big picture bears more, if that happens. But not if bull flags remain on long-term time frames. So XLV looks great for the bulls. And resistance from here is 136.83. And then there's very limited resistance to the all-time high. Plenty of space for a daily high or low next time we consolidate. XLF, 2-day time frame. What's our bounce retracement size at this point? It's starting to get significant. So from that high to the low, and we bounced 58% or so. So we know there's tons of space for a higher low to form once we top out. We are going to be watching for a tightening range, but we haven't topped out yet. The hourly uptrend is our short-term guide. And again, everything closing up at the high of the day here. Very curious to see how quad witching day goes tomorrow. IWM, trying to be a laggard, have to break 205.30 and 209.05. We're testing 205.30 right now. And again, the weekly time frame, EMA 12 resistance is being tested as well. It's an equilibrium bull break if we get over 205.30. But again, monthly time frame has a lot of space for a monthly lower high. So I'm keeping that in mind as well for names that have pulled back more significantly. And bulls still have proving to do on IWM. They're starting to try and shift this momentum. Tesla is close to seeing a notable bull break. If 890 breaks on Tesla, that's a weekly trend change confirmed. From there, I would zoom out and scout a monthly lower high as the most likely scenario. I sold 25% of my swing position today on Tesla because we're right under key resistance in the S&P 500 and in Tesla. We've run significantly the last 3 days. And so that's just me taking some profit off after we're averaging 5% returns 3 days in a row. So take some off. If we break resistance, I can buy into strength and just average up a little bit. And if we reject, then I will look to potentially add on consolidation or just stick with a smaller position size. This swing size for me that I've had on Tesla is a bit bigger than I'm comfortable with, and it's more than my normal swing size position. So I don't mind trimming it down a little bit. But again, if I keep seeing proof from the bulls, I will add it back again. But it's all about 890. And if we reject from 890, we remain within a tightening range. Look at the 2-day time frame. And there's a lot of key resistances in play tomorrow because we got a low, high, higher low. And if we reject, we can definitely stay within this range for another week plus. Biotech sector, we talked about it being a potential laggard. So it broke resistance of 89.03. Now it's 91.36. So again, bulls have tons of proving to do. Any name that's coming off its fresh low, like the NASDAQ, must confirm a daily trend change once this move tops out. Because again, that's the shift where we shift from disbelief to some FOMO, in my opinion, if daily trend changes confirm after we top out on this move, set a daily higher low, and see bounce continuation. So that's a must if we're going to keep talking bullish. And again, in one day, I can shift back to being a bear. It all depends on what we get. So far, every time I ask the bulls to do something, and I'll tell you what I mean by that, they're doing it. So I just lay out, this would be the most bullish scenario. This would be the most bullish scenario. So an example right here is, so at 313 for SPY, I recognize, okay, SPY just confirmed a 15-minute downtrend, or was I talking QQQ? They both did it. QQQ. So QQQ, 15-minute downtrend confirmed. Okay, hourly consolidation is underway. Bulls must show up here to keep an hourly bull flag in play, running out of time on the day. Literally the minute I said that, that's our bottom. So I'm not saying that I nailed the bottom, 313. What I'm saying is, because I didn't act on that, it's just knowing the most bullish setup from here, now that we've broken support, is not seeing any follow through. Because a 15-minute downtrend confirmed with zero follow through shapes up a potential hourly bull flag. So that's what I mean when I say, if I'm laying out the most bullish scenario, what needs to happen, and the bulls keep doing it the last few days, that keeps confidence high for the bulls. So biotech sector has to prove it with a daily trend change, just like the NASDAQ. And right now, the NASDAQ is our least strong major sector. Healthcare, financial sector, and then QQQ big tech. MSOS, I sold half of my position today because we rejected, and just keeping an eye on this level between 1955 and 1967, it's been a brick wall the last week plus. Very clear level that we just can't get over. And so after seeing this significant multiple day bounce, we struggled at that level again today. And so I did take profit there. And it was this, I was leaving the computer for a couple hours. So I saw this rejection. All right, I'm taking half off to be risk-free in this trade because I did enter a little bit late. I entered yesterday afternoon at, I think, 1889. So now that I sold half, my average is in the low 18s, which makes me way more comfortable. And it's the same thing here. It's a daily bear flag confirmed with zero follow through, some bull volume ticking up, the slightest start of some bull headlines starting to shift some sentiment, but we must confirm the daily trend change once this move tops out. And I am the least confident in MSOS comparative to a Tesla weekly high or low, or comparative to a Facebook daily falling wedge. So took half profit in MSOS. Haven't touched the Facebook swing from yesterday. Nice follow through there. 213.15 next key level. We'll have to confirm a daily trend change here as well. Again, we're coming off the low. There's still a bunch of proving to be done. And again, it's just constantly reminding myself, don't get overly confident. Don't get too cocky. It's been a nice few days. Proving has to be done still. Tomorrow, I'll look bearish. I'm going to be looking for bear trades first thing tomorrow morning. We'll see how it shapes up. Commodity world. Anything else? Chinese names. So hourly uptrends intact. Daily inside bars on many names. Double top on NIO by 6 pennies. But again, the trading volatility on NIO has just been a thing of beauty. I know I'm scouting NIO short. I'm more confident in NIO seeing daily consolidation in the short term than I am on the broader market as a whole. So I'll just keep an eye on, just like today, I'll do the same exact thing I did today on NIO tomorrow. And I would stop. Again, all of those stop outs were break even, break even, break even. And if it were half day loser, quarter day loser, then I'm done. So I'm not just constantly trying. It's only because it's such a small loss that I will keep trying forever as long as it's just break evens. Commodities, dollar. If you're a market bull, you want to see the dollar bear break here. 97.71 is a double bottom. It's not a coincidence that the dollar is testing a key level of support right as the S&P 500 is testing a key level of resistance. March 10th is when the dollar hit that low. March 3rd is when the S&P 500 hit here. Interesting comparison, but a key resistance and a key support test. And if we hold, it's an equilibrium and a continued tightening range on the dollar. And if we break, weekly consolidation is underway with a lot of space for a weekly high or low. Curious what the VIX is doing weekly. The VIX is a weekly equilibrium as well. We got to be watching for anything above 1993 to be a high or low. So I do keep an eye on the dollar and the VIX, just as little puzzle pieces on the bigger picture as well. Gold getting its bounce going. And a big one, solid bounce. So stair-step pattern, lower high every day. We know the daily bounce is coming. Now we measure our retracement size. How long can the bulls maintain a 4-hour uptrend? We haven't even confirmed it yet. But once we confirm a 4-hour trend change, how much follow through can the bulls put together before we top out? That's going to help us determine what's the most likely scenario. Is it a bear flag on the daily? If we don't clear 1962, it's a bear flag. If we get all the way up to, whatever this is, 1984 and beyond, we then start looking for that equilibrium to potentially shape up as we create the space for the higher low once we top out. I will be interested in adding swing positions in gold and silver on a 12-hour high or low, just playing off this recent low. That's either our weekly high or low, or it's a red flag. So I will stop out if that level were to break, but I will be looking for a play off of that level, maybe tomorrow. If we 12-hour consolidate, I'll make an entry and put my stop under the low, which for GLD would mean, I'm looking for an entry, maybe in the upper 179s, my stop goes under 176. Risk a couple percent for the potential to get that weekly higher low. And silver, I assume, is doing the same thing to a certain degree. Yep, solid bounce. Retracement looks more significant at this point, but again, just a straight move off the low. So I will be scouting 12-hour higher lows. A more aggressive bull would be scouting a 4-hour higher low. Oil had a solid big bounce today. Nice signal from the daily inside bar breaking bull. 4-hour trend change confirmed. Higher low. Low risk bottom fish, bull break to the higher high, and a very notable move. We're up 10% off the lows. Same thing, we're watching for a daily lower high and there's a ton of space for it to be set. Market bulls are looking at this and pleased that they didn't keep up that inverse relationship as far as market dropping as commodities bounce. That relationship has shifted significantly since our tops were set in these commodities. Oil has a ways to go, 108. To try and eliminate a potential daily bear flag. And the 4-hour uptrend is our guide. CCJ uranium, big bull follow through. Should have held on to that tsunami fear low. That's a massive bounce. All about 28.18 from here. And plenty of space for an hourly higher low next time we consolidate. Bulls have proving to do. All right, I hope you're well. Do good things. I'm out of end of video content. I'm about to go plant some stuff. So I'll have some new planting videos soon, but until then, we recycle old content.